Hey guys, what's up? Today I'll be talking about deviation and clean double closes. So what is a deviation? A deviation is when a price fails to hold a retest of a broken area. So for example, we have two lines here. This is support, red is resistance, and price comes here from support it bounces to resistance. Then it breaks resistance, and then people are like, oh shit, it's gonna go up. But what price actually does is it comes back here to retest it, but it fails to hold the retest and it falls down. So this part over here is this is what a deviation is. This part, right? Then this fails to hold it and then goes straight down, right? This is what a deviation is. Now, what is a clean double close? Clean double close is when price breaks a level and impulsively closes below or above it again. So I'll show you an example. So here, so one second. So as you guys can see, this is the bearish example. Price comes here, right here, and then it looks like it's gonna break out because the candle at resistance is green. But what it does, the next candle is red and it completely eats the previous candle, right? It completely eats the previous candle, right? Same here. Price comes to support and we think, oh no, it's going to break out because it broke support. The next candle immediately is a green candle and it straight goes up. So what this basically signifies that as soon as this green candle is printed here, people think that, oh shit, it's going to break out, and all the breakout traders, they come into the trade and they expect the trade to like go bonkers. But what actually happens is we print a red candle here, so price goes down. So the main part of this setup is that the following candle should be significant enough to like swallow or like eat the previous candle. And this is the same example, but it's rounded. Here we are at resistance. Same thing. Price breaks. We go up, and then the price breaks. There should be no retest anywhere here for this at least. There should be no retests here, right? For at least for this rounded retest. But in deviations, it may or may not happen. This is different from deviation. It is also a deviation, but it's a different setup, right? Same for the bullish example. Price comes here and then goes up again. It breaks one way, breaks the other way. So what it basically does, it traps all the people that thought this is going to break out or break down, and what it actually does is goes in the opposite direction, right? So entry triggers. So entry triggers. Where would you enter these trades? So our first option right here is market order on candle close above the level. Market order on candle close above the level. So for this, your candle close should be significant enough or big enough. The second candle that breaks the level should be big enough. It should basically swallow the previous candle, right? And it gives you less RR and is more aggressive. And I'll show an example here. So here, let's say your entry is on the candle close, right? So this candle closes here, breaks 11 closes, so this candle will be your entry trigger. And then you go back down a little bit, then you go up. So this is the first entry trigger, and we'll also talk about how you can place your stops and where you can place them. And either you can have a market or a limit order on retest of broken level. So market or limit order on retest of the broken level. This is more conservative, offers better risk to reward ratio, but price may or may not retest this level, right? So one second. So like right here, you can put your buy position here, and like wait for price to come here and then go up, but it may not offer that, as we can see here. It's not offering a retest of this level, but it does in some cases, it does not in some cases, depends on the context and everything too. You could also buy with 50% strength here and then say 50% for the retest, so at least you get in position if it does not retest, and if it does retest, your average buy is like not that bad, right? Now moving on to invalidations, where would you say like this setup is invalid? So if you put your entry figure here, then you gotta put your stop loss as a thrust candle stop loss or highest high or lowest low made before the broken level. So thrust candle stop placed near the candle that broke the level. Close should be significant enough for this to work, right? Stop placed near the candle that broke the level. So this will be here, or I'll give a better example. So this broke the level, so you enter here and your stop would be here. This is the candle that broke the level. You're going to put your stop here or somewhere like here. If you're like going to be conservative, put it here, right? Your candle flow should be significant enough, like this move is significant enough for it to work. Or you could also go to the highest high or highest low move. This would work for the rounded retests. I'll show you. So here you would put your stop here, like the highest high mid, or you would put your stop here, lowest low mid, and you would enter here, or enter here, or enter here. Either you enter on candle flows or either you wait for the retest, does not matter, it depends. But your stop should either be in rounded, I would prefer the furthermost deviation, and in like the double candle close, I would prefer the thrust candle stop. Right? So it offers a more conservative approach, like I said, and it may offer worse RR than, let's say, the thrust candle stop, right? Because it's further away. Thrust candle is here, this is like here. Time frames where this setup would work, it definitely works on all setups, but clearer signals are better signals. It would definitely work better on daily, for hourly. It also works on 1 hour and 15 minutes if it's like very, very clear. And there are some nuances as well. Good level selection is, I think, one of the biggest things you guys got to pay attention to for the setup. The setup is pretty clear, so make sure you select good levels. Second break should be strong and fast so that those on the other side of the market don't have time to react. Generally, you want these moves to be so fast that people are trapped here on the wrong side of the market. As we already know, breakout traders think this is going to break and then go up. But what actually happens is we get a candle like this to the downside. Now, these people have been caught offside. The people that thought that this was going to break out when this candle formed, and now it just goes straight down. So you want it to be a fast and aggressive move, so that more people are caught offside and have to close their positions. Like there will be more longs opening here, so people are thinking it's going to break out. So when they close their position, when they close their longs, it's obviously in order to sell. So it helps to increase the selling pressure here, and it goes down. Same logic applies for all of this. Yes, for even this one, this rounded retest, rounded close. There should be no touches of this level. So we got a resistance level. It should have a clear break, comes fully back rounded, and it should also have a clear break. No retest, no touches, no wicks to this resistance level. So that will straight go down. Right, straight, same thing here. No touches of this level by any of the candles, no wicks, no nothing. Breakdown on one side of the level, breakthrough on one side of the level. Should be clean, simple, easy. Right, so that's how you trade double candle closes. It also shows some examples of I think deviation. Yeah, so right here we have a resistance level, support level, pretty easy. Price breaks out, um, right here, forms a nice little deviation here, falls back into this range. This is where you want to short it and go straight up. So now, where would you place a stop here? Right? If it was me, I would place my stop here and I would enter here, because if you place your stop at the furthermost deviation, the risk to reward is not there. See, this is the amount you're risking versus this is the amount you're making. Right? That's just not for me. Because the candle is significant enough, you can definitely place your stop here and you can enter here. Right? Now, what is a deviation? A deviation is, as I said, a failed retest, right? But let's say you were here, price breaks down, and you wait for a deviation, right? You wait for a deviation, something like this. But what actually happens is, price comes here, retests this, and trade goes down. This is the complete opposite of what happened here, right? Price broke out and then came back here again. Now, here, you don't want to be in the deviation thinking that, oh, it's going to be a deviation, let me short it somewhere around here, right? You never want to do that. You want to wait for it to come here and then you want to short it. People that short too early get punished, right? And shorts that are too late also get punished. Here it retested and went straight down, right? That could also happen. Another example is here. This is so basically a range, right? Price breaks out, forms a deviation, and then goes back into this range. You want to be shorting here. Let's say you short on this candle close. Oh no, wait. You're short on this candle close, right? And where would you place your stop loss, right? If you put it here, the risk to reward ratio is not that great, right? So what you're gonna do is entry here, and then your stop. I would say this is too close. This is too close to support, to resistance. Sorry. So I would put my stop one candle back here, right? This is the stop. This is the entry, and this is a profit to take. So that's how you create deviations and double clean candle closes and rounded candle closes.